So I would say that if you like, the normal gold bull market has only just begun. Clearly, markets never move up in a straight line. We all know that. And like a lot of people, I've been nervously awaiting a pullback for a few weeks now. You know, even a month ago, we could say with the Fed's rate cut in the rear mirror, that was old news. With some stronger economic news, perhaps a pause. I mean, perhaps a skip of a meeting with another rate cut. You know, and after having moved up so much, it's sort of understandable to think we might get a correction. And I was certainly I still am looking for one. What I will say, however, is that the pullbacks in gold so far have been very short and shallow. Gold has been remarkably resilient. Sometimes it'll be down in Europe and then it goes up in the US. We don't even have to wait a day or two before we get the bounce back.
In today's news recap, Bitcoin and gold both win if Trump secures election, says JP Morgan. Analysts at the top bank think traders are feeling uncertain about the market, and this could further benefit Bitcoin. Gold is rising, and so is Bitcoin, and both are poised to continue seeing gains in the weeks to come, thanks to geopolitical uncertainty, worries over the strength of the dollar, and the upcoming U.S. election, according to JP Morgan analysts. In a Thursday report, analysts at the bank said that a debasement trade is coming, which could further drive demand for both gold and Bitcoin and help push up prices. A Donald Trump victory next week in the U.S. presidential election increases the likelihood of such a trade, JP Morgan analysts said. A debasement trade is when traders try to hedge against weakening currencies, geopolitical headwinds, and government deficits. Gold is typically a good insurance policy against weakened fiat money. Top asset manager BlackRock has also touted Bitcoin's so-called digital gold as another asset to invest in during times of uncertainty. Rising geopolitical tensions and the coming U.S. election are likely to reinforce what some investors call the debasement trade, thus favoring both gold and Bitcoin. The report read, Republican nominee Donald Trump not only has come out as the crypto-friendly candidate in the race, but his policy to increase tariffs could lead to more inflation and geopolitical tensions. The report noted, the real estate mogul said he wants all future Bitcoin to be mined in the U.S. and also launched a decentralized finance DeFi project running on Ethereum that plans to release its own stablecoin, Decrypt previously reported. Gold has this year hit new highs and Bitcoin is now just 5% off, touching its March all-time high. The biggest digital coin is trading for $70,114, CoinGecko data shows, after nearly setting a new all-time high on Tuesday. Now we'll show you more clips, but first smash the subscribe button and hit the like button as more people need to know this. Let's get back into the episode.
So I don't think we should be, I mean, you know, as an investor, as a person who manages other people's money, I don't think we should be surprised if at some point we get a pullback more meaningful than we've seen. Let's look broadly. Over the last 2 years, as we know, gold has moved up very strongly. Initially, it moved without the stocks moving at first, without participation from Western investors for the longest time. It was moving up because of central bank buying, number one, Chinese consumer buying, number two, which starts, central bank buying has been the last 2 years. Chinese buying has really stepped up since January. Now, both of those two, you could say we might get a pullback. I mean, we know why central banks are buying. It's because of a weaponization of the dollar, but they're also diversifying their assets. And so if a central bank says, well, we're now at 10% gold, they might say, well, we can afford to be a little more relaxed about buying more. So it would be natural if you got some kind of slowing of central bank buying. I will say this, however, that when China paused, as you know, in May, they haven't bought June, July, August, or September. And that didn't do much to central bank buying, but central bank buying is very, very broadly based. As for Chinese consumers, they were buying gold because they're nervous about the economy, but they're also nervous about the banking system. They're nervous about the stock market. They're nervous about the real estate market, and they can't buy crypto. So what are they left with? They're left with gold. But now the stock market in China, as you know, in the last month, has staged a remarkable rally. And of course, the time to be buying is when things are low. But if you're an investor that's seen your market for 2 years just slide consistently down 40%, you don't really look at the stock market as a safe haven. But now that it's rallied, I think you could see some Chinese buying switch from gold into stocks. So that's a kind of, sorry, I'm going on a bit about this, but what I'm trying to say is that there are reasons to think that some of the buying that we've seen may pause. But my own view is that any pullback we get is going to be very shallow and very short-lived, because the fundamental reasons that gold has been going up, the fundamental reasons that people have been buying gold have not gone away. Central banks are still worried about the weaponization of the dollar, and that is, if anything, going to increase over the next few years, not decrease. Chinese consumers are still worried about the economy and the banking system, so we'll still get support. And the last thing I'll say on this is I have a bit of a, let's say, different view, or I have a view on the gold market. I see the last 2 years, from really October of 2022 all the way through to the end of August, I see that as a run-up in gold and also silver and gold stocks, unrelated to the normal reasons that gold moves. In other words, the macroeconomic environment that normally drives gold was completely missing. You had high interest rates, you had low and declining inflation, and I'll say seemingly, you had a seemingly strong economy, you had a strong stock market, a reasonably strong dollar. That is precisely the wrong environment for gold to be going up. So what we saw for 2 years was really something completely different. People were buying for completely different reasons. Now, starting last month, we are beginning to move into that economic environment with the Fed having its first rate cut, and it's the first of many, or several at any rate, and clear cracks appearing in the US economy, the dollar declining. We're now moving into an environment that is actually an environment where gold should move.
In today's news recap, Chinese market records growth in gold jewelry demand. Despite the impact of high gold prices, seasonal factors have buoyed a quarter-on-quarter resurgence in gold jewelry demand within the Chinese market from July to September, the World Gold Council said on Wednesday. Data from the WGC revealed a 19% quarterly growth in gold jewelry demand in the Chinese market during the third quarter. However, owing to the combined effects of elevated gold prices and economic conditions, gold jewelry consumption dropped by 34% compared to the same period last year, marking a 36% dip from the 10-year average level. Notwithstanding recent outflows from the Chinese gold ETF market, the cumulative demand has reached a record-breaking 17 billion yuan thus far. Demand for gold bars and coins decelerated, amounting to 62 tons in the third quarter, marking a 22% quarterly decline and a 24% annual decrease. Factors contributing to this downturn includes a higher baseline from the same period in the previous year, the appreciation of the Chinese renminbi and domestic assets, particularly towards the end of the third quarter, and the stabilization of domestic gold prices at elevated levels for much of the quarter. Furthermore, the recent rollout of a series of favorable economic stimulus policies by the government is anticipated to bolster future gold jewelry consumption. Nonetheless, uncertainties persist regarding the impact of high gold prices and the efficacy of various stimulus measures in boosting consumer confidence. Additionally, ongoing industry consolidation and the reduction in retail outlets may potentially lead to a contraction in upstream physical gold demand, according to Wang. Now we'll show you the best clips of his latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Payment system. That's how the US dollar, in my view, will lose its reserve status. Now, is the latter, the US losing its reserve status, going to happen overnight or next year or the year after? No, it's not. But the US, if you look at both the payments and you also look at, the payments and also how trade is paid for, 40 years ago, it was maybe 95% was in dollars. Now that's come down significantly, but still the overwhelming majority of world trade is in dollars. But they're chipping away at the margin. And if you get Saudi Arabia and, as we saw, Saudi Arabia and China agreeing to do the oil in other currencies, that's very, very meaningful. So all these things are chipping away at the dollar's dominance at the margin. The other part of the equation, of course, is the dollar as a reserve currency, not just its use in trade, but as a reserve. Well, again, in the 1990s, something like 75% of central bank foreign reserves were in the dollar. Foreign reserves meaning not the currency of the country itself. So in terms of German central bank, we're not talking about the euro. In Britain, we're not talking about the pound. So foreign reserves, 75% was in dollars. That number's now down to barely above 50%. So there's already over the decades, it's stepped up in the last few years with the weaponization of the dollar and the huge twin deficits in the US. We could go on about the problems in the US for a long time, but foreigners see these problems and want to diversify away from the dollar. So now we're barely above 50%. So you've got the payments and you've got the reserve, and the dollar is slowly losing its overwhelming dominance. It's still the most dominant currency without a shadow of doubt. And until there is a well-established alternative, it's certainly going to remain the world's reserve currency. But again, as Hemingway said, slowly at first and then suddenly. I think once you get under 50% of reserves, foreign reserves in the dollar, once you get 50% of the trade in currencies other than the dollar, then the dollar starts to lose its dominance very, very quickly. So yeah, there'll be some disappointment if something didn't happen, but if I can say this, an awful lot of the stuff I've seen over the last few months, mark your calendars, October the 24th, sign up here for my special bulletin alert for $1,000 a year. It's just a way to get people to buy subscriptions, frankly. And people should be a little more skeptical of some of it.
What do you think about Adrian Day's insights on the role of gold and silver in today's financial landscape? Day highlighted how economic uncertainties, along with global debt concerns and central bank buying, make these metals an ideal choice for wealth preservation. With gold setting new records and silver showing strong momentum, he believes these assets are crucial for navigating the challenges ahead. Be sure to join us in our next video where we'll explore more expert opinions on market trends and the future of precious metals. Thanks for watching, and we'll see you next time.